morning to all traders and welcome to this week's metals and energies market size video. We're going to talk about gold, silver, as well as the oil. So as you see, this is a commodity based outlook for the day. We've seen gold and silver and also the oil market, all the commodities actually rising over the past few days and maybe even actually more than a week. Which seems to suggest that the markets, traders and investors are expecting much better global economic growth in 2020. Okay. Now, with that being said, and if we also add the fact that the geopolitical and macroeconomic risks as well are going to remain elevated in 2020, okay, then we might see some pressure, some weakness on the US dollar, not necessarily falling, but at least being consolidating in a tight range, okay? However, if the US dollar remains strong, we could still see the gold markets moving a little bit lower. And if we add on to that the fact that uncertainty around Brexit and also the trade war is deteriorating, then that could as well might as be a move to the downside for the gold over at this level. Now, from a technical perspective, it is supported, okay? And that means that gold now can be seen as a W, X, Y, X, and Z, okay? This is a triple combination, and this will be wave 4 is. Now, what we really want to do, okay, I've drawn this Fibonacci, the retracement level here from there to there. We are at actually 61.8, exactly at the golden ratio, which means that if we actually stay strong here on gold, most likely going to see another move to the downside, okay? Now, this move can indeed be another ABC as a zigzag, right? That is going to break below the previous low, of course, with wave A most likely. Or we could see that becoming a triangle, okay? That is also a very potential scenario because this is the end of the correction, so it could take a triangle form. I wouldn't be surprised. There is no signals on the RSI or the MACD, okay, at least in the 1 hour time frame, which means that we could still see a move to the upside, okay? Now, is this going to invalidate the triple combo scenario? It's not going to invalidate it, no. At least that 1536 or so, up until that level could potentially go up there. But if we break above that level, then the chances of really pushing lower then would be limited. Now, on silver, I was expecting silver to come and finish over here. If you remember, I had 1, 2, 3, 4, and 5. That didn't happen. We had a good flat correction over here, looks like it, and then another move to the downside to take out these stops. We've taken out these stops below 16, and then we started moving higher quite aggressively as well. What we want to really see is a break above the 1822 and then the 1833. Right? Now, of course, with the gold as well, if that doesn't happen, it means that we are going to see pressures here, right? These pressures are going to take prices lower. Now, because this is, of course, a different pattern, right? We don't really look at this moving all the way down there, which seems to suggest, and also considering the gold as well, if we come up here and then we start correcting, we can go down to the 50-60 Fibonacci extension, retracement, right? This is the retracement between this last move. Now, if we come down here and we start settling and then start moving higher, this possibility would also mean for gold that gold could indeed have another move to the downside. It would be the X here on gold, and then the Y over here would potentially become a triangle, okay? Which means that if silver remains strong, then the chances of seeing gold ending with a triple combo with an ending diagonal with a triangle are actually more likely. The histogram becomes biased to the upside, okay? Which means that we might see indeed another move to the downside, but it's not going to go much longer than the 50 or 61 Fibonacci, okay? And then move to the upside. So when you look at those two, when you look at silver or gold, always look what happens with gold or silver, okay? And now on the US oil situation, that actually moved exactly as we expected, right? We're expecting this to be 1 to 3 from 5, and that will be completing Y, because we have W, X, and Y, right? So with that being said, we've had this move ending wave 3 over here, okay, and then wave 4, and now we'll move up. Now this 88.6 Fibonacci retracement is from there to there, right? So we are standing very close to this break-even, let's say, level now that would make this some sort of like, it will make that a flat correction, right? And then we should, of course, start looking for prices to move lower. However, if that is the case, we are most likely going to see prices ending anywhere between the 62 and the 63.40 or so, okay? Which means that I'm still expecting that to move a little bit higher up, okay, in order to take some break-even stops out as well, okay? And then the thing is that we do see here some bearish bias on the MACD, right? Which means that we might just get up to the 62 and then start moving lower. However, that might, as I said before, that might be supported further to the upside, because it's really important for institutions to take out these break-even stops over here. Of course, the other scenario would be that this is, you know, we could just simply see another correction down here and then break above the 63.11 and start moving higher for potential higher highs. Okay, so I would be looking in this case, I would be looking, if we have a descent, I would be looking that to be testing that ascending trend line over here and then moving up. Okay, so in a case we have a move to the downside, pay attention to the ascending trend line.